Spend, spend, spend. British shoppers part with their cash in July, suggesting the economy isn't in as deep a mess as the official GDP figures suggest. In fact, the UK might not even be in recession at all. I'm Jamie McGeever and this is today's Market Pulse. Well, let's hear now from George Buckley, Chief UK Economist at Deutsche Bank. George, strong spending in July, June figures revised up sharply. Are we looking at a Q2 upward revision to GDP?
Well, I think there's a risk, but I don't think it's necessarily because of these figures. I think we're more likely to see an upward revision to GDP because of the fact that industrial production didn't fall as much as we thought it was going to do in June, that construction spending was revised. So I think we will get an upward revision to GDP in Q2, but it's probably more to do with the output side, the IP figures and the construction numbers. And
we're probably still in recession then, going by what you've just said.
Yeah, I think we are, and one of the big reasons that we saw such a sharp decline in GDP in the second quarter, it's probably going to get revised to about -0.5, but almost in the entirety of that -0.5 revision, which we hopefully will get, will be due to the Jubilee. So it's not due to an underlying weakness in the economy, although that said, zero, which it would be if you're stripping out the Jubilee, is still pretty weak.
Well, today's numbers, retail sales quite strong. Yesterday's employment figures particularly strong as well. How does that marry up with the fact that the economy has been shrinking for the last 3 quarters?
Yeah, and if you look at the numbers in July itself, I mean, excluding fuel, it was flat. It wasn't excessively strong, but we did have that upward revision to the back month. So at almost 3.5%, the rate of growth of retail sales is a good number. That is encouraging for the third quarter. I think you will get a big bounce, largely because of the rebound we're going to get from the post-Jubilee effect. So I think we will get a bounce, and it should be a fairly decent bounce in the third quarter. Whether that can continue or not is a very different matter, however.
OK, so finally, what does all this mean for the Bank of England and its policy?
Well, we've had a few stronger numbers this week. We had today's retail sales numbers. We had the employment figures yesterday, 200,000 up on employment. It's one of the biggest increases we've ever seen in employment, and inflation, of course, higher than expected at 2.6%. I would suggest that the Bank of England won't be wanting to do anything at all in the near term. The next question, or the next month that we have when the Bank of England really has to think about this, is November, which is when the bank will have finished its current round of quantitative easing. Do they cut rates? Do they decide to add more QE to the mix? Well, a lot's going to depend upon Europe. And if we start to see more volatility creep in September, October, when a lot of events are happening in Europe, then that could cause the bank to err on the side of caution and do more. At the moment, we don't think they will.
OK, George, thanks very much. Great stuff. Well, sterling gets a boost from those retail sales numbers. With me now is Reuters FX analyst Neil Kimberley. Neil, what are the immediate targets on the upside for cable and the downside for euro sterling?
Well, Jamie, we've seen this little move up to around 157, the figure, since the numbers come out. Some decent Asian selling around that level, but it's not coming off too far. 156.90 as we're coming on air. And interesting point, we've got this moving. There's a moving average, 200-day moving average. I think it's 200-day moving average. Yes, at 157.17. So there's a lot of people looking to sell at 15.20. But there are a lot of stop losses, Jamie, coming in around the 157.35 level. And it starts to get very ugly above 157.5. And I'm hearing a lot of stops out there because everybody's looked to sell into the rally. The danger is, in a very thin August market, we could see that little squeeze up in sterling that takes people unawares. And as soon as you get through 157.5, I've got people talking about 158.10.20. It seems unrealistic to me. But in this market, the man with the order is king.
And euro sterling?
On the euro sterling, it's fairly steady. I mean, the euro dollar itself is doing very little. 78.20 as we're coming on. The key point for me is, so 78.20. A lot of stop losses through 77.90 on the downside. There's a lot of people have just sort of, well, we've had a bit more optimism, if you want, out of the euro land. Possibly misguided. Many would disagree with me, but nevertheless, people sitting there longer. But the stop loss is coming in below 77.90, and then it gets very messy, because the key level is 77.50, and if that goes, we're opening up some big levels.
You're talking about the October 2008 low, just under 77.
76.90 was the October 08 low, and that's 77.50 levels of 100-month moving average, which has been proven very tenacious.
Okay, now you just heard from George Buckley at Deutsche Bank there. Q2 GDP might not be revised up much, if at all. There's a note from HSBC today saying the downside risks to sterling are mounting. Current account gap, trade gap, softening M&A inflows, etc. As we get towards September, what's the outlook?
Yeah, I take the point on macro, and people come at the UK economy from very different directions, and there's a reason why they call sterling the widowmaker, because it moves very vicariously. If I'm an overseas investor and I'm coming back from my 2 weeks down in the south of France, going into September, I'm interested in the return of my capital, not the return on my capital, which may make euro sterling the more interesting play than cable, because we've seen the yields moving up in the US Treasuries. It's difficult for sterling to fight against that. We know from the last Bank of England minutes that they didn't discuss an official benchmark rate cut. George has just said that they probably won't be making any big decisions until November. That's an awful long way away. Between now and bonfire night, sterling can do a lot of stuff. Now, September is where this market's going to come back into full force. August, frankly, has been a disaster. Minimal volumes, everybody's out, and a lot of the banks are falling behind on their profit and loss targets. They're going to have a punt in September. I'm just wondering whether sterling, when people come back and they look at this spate of half-decent number, they look at that Olympics feel-good factor, whether sterling is the surprise package for September.
And you think it will be done against the
euro? I think more predominantly against the euro. I think the euro is having a little bit of a calm here. But when I look at how much money the Spanish and Italian banks are taking off the ECB and how little money those same banks are lending into the retail market and the home markets, I do feel the euro's getting away with murder.
Okay,
and
Neil,
will come back to bite it.
We'll see what happens over the course of the next couple of weeks. Thank you very much. Well, that's all for now. Do watch us at this time every weekday for Market Pulse. A look at what's moving on markets and why. I'm Jamie McGeever. This is Reuters.